after the airstrike, Donald Trump do request that Iran talk to Israel, and also he said that they already removed Iran's nuclear capability for now, so they are going towards peace talk, and this actually fueled the new stock market rally to the all-time high. Welcome to our monthly market update for Busy People series, so where we'll get you up to date with the global stock market while you're having your lunch. Right, I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the latest stock market. Since we are doing this over the lunchtime, I will keep it to 30 minutes. I will start the timer when we start. We'll cover the market highlight, major stock market indices, performance, and the upcoming opportunities and also risks out there. And of course, we'll wrap up the session with the Q&A later. So are you guys ready? You may type in the chat if you are ready. Let's take a look at what happened in July. But before we start, just an important note before we proceed. Whatever we share here today is based on latest data and also facts. If there is further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor and we do not manage customers' fund. We are an educational institution, so our purpose here is to educate people so that you can make your own decision and be your own investment manager. That way, you have a better control over your decision, hence be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy and sell. So as usual, let's take a look on what happened to the stock market over the past month. All right, so during June, what happened? All right, so first of all, we have the US trade war. So we know that during April, Trump launched the Liberation Day and he tariffed the whole world, right? After that, he do have some extension for negotiation. So let's take a look on what are the latest development out there. But of course, among all the big nations, the most important one will be the US-China trade talk. As we know so far, after the few rounds of negotiation, they finally get a framework of decisions to go back to their each of their leader. For example, China representative need to get approval from Xi Jinping, and also US representative need to get approval from Donald Trump. So for now, we don't see any new development yet, but let's wait for any outcome during the month of July, during the deadline. For now, they already have a framework of terms and they are pending approval from their respective leaders. All right, of course, during the negotiation, China is easing some of the restriction on the rare earth exports, and at the same time, US are setting tariff on China goods at 55%, down from earlier 145%. And China also want to relax some of the export restriction for rare earth, and US want to relax certain technology export restriction to China. And also at the same time, they finally reverse the proposal to restrict on China students attending US universities. So they are reopening the universities to China students as well. All right, and for the US-EU trade talk, it's still ongoing. And early on, Trump do threaten Europe to threaten Europe because of the lack of progress in the trade talk. And EU, after EU clarified that they want to talk more, then things are still on hold and still on the existing term. So by July, around 10th of July or 9th of July deadline, we may see more news coming out during that time. All right. And the next important event is the US spending bill. So how many of you heard of this bill called One Big Beautiful Bill Act by the latest United States government? So this is the US spending bill for the new government from Donald Trump. So this one already approved according to the news yesterday. They already finally go through all the Senate votes and finally approved as a approved Senate. All right, so now it's pending the president, but likely it will go through. And what is this One Big Beautiful Bill about? We do cover that with our students last Sunday, and it's about the upcoming US spendings and what industry likely benefit from it. So in high level, the defense budget will be the one people are concerning about. So the defense industry may be benefit from this approval of the spending bill. And also at the same time, it's about tax cut and also tax cut extension. All right, so with this bill, it increased the US deficit by around 3 trillion. And also at the same time, for this budget, they also increased the debt ceiling by around $5 trillion. So we do see that going forward, the debt ceiling issue could have temporarily resolved with this bill approved, but it do introduce more deficit to the United States. And this also sparked some controversy when earlier on, when it passed the House, Moody's actually downgraded the US credit rating. All right, and other than that, let's take a look on the monetary policy side. So just now, the US spending bill is about fiscal policy, and now we are going for the monetary policies. All right, so what happened in the last FOMC or the Fed meeting? All right, so the Fed remained the rate unchanged, but at the same time, they do increase their projection for inflation, higher projection for inflation, and also higher projection for unemployment. So the Fed do foresee that potentially the economy may slow down, and they do factor in that, they do consider that with all this tariff ongoing, the inflation effect may kick in later. That's why they project higher inflation in the future. So what does it mean to investor or trader? So investor or trader may want to monitor the upcoming FOMC, whether they're going to cut rate, but according to the projection, they're still going to cut 2 times this year. All right, so this is the good part. But the negative part will be they increase the inflation projection, they increase the unemployment projection, which means that economy potentially slow down, and also at the same time, inflation may going up, which is very difficult situation for the Fed. All right, so this is from the FOMC, from the monetary policy. And what happened also in the stock market in this month also is about the Middle East tension. So how many of you heard of this news during early or mid-June, whereby Israel airstrike on Iran, and also at the same time, US also airstrike on Iran? You may type me in the chat if let's say you heard of this news before. During month of June, we do see that Middle East tension escalated when Israel airstrike on Iran. However, things developed fast. So after United States airstrike on the nuclear facilities in Iran, now they are in a peace talk progress. All right. So after the airstrike, Donald Trump do request that Iran talk to Israel, and also he said that they already removed the Iran's nuclear capability for now. So they are going towards peace talk, and this actually fueled the new stock market rally to the all-time high after this issue resolved, or I would say the peace talk news came out. All right, but of course there's still some minor bombing between each other. But I would say for now the focus, or I would say the negative sentiment or the concern about this region temporarily doesn't reflect on the chart anymore. The chart is pretty bullish, so later I'll cover the stock chart as well. All right, and lastly would be the passing of Genius Act through the US Senate as well. So what is the Genius Act? Is about guiding, the full name is Guiding and Establishing National Innovation for US Stablecoins Act. So what does it mean is, now US already have a regulation or a law to governance the stablecoin, and at the same time also all these companies like for example Walmart, Costco, they can issue their own stablecoin. Or let's say for example you are a financial bank, also you can issue your own stablecoin, like for example JPM also plan to issue a stablecoin. And this likely benefit which industry? You may type in the chat as well if let's say you know some of the industry that will be likely benefit from this. But for us, what we saw is this could benefit all these potential brokers firm that offer stablecoin trading in the past. For example, like all these Coinbase, Robinhood, all these financial brokers. And financial brokers industry is one of the beneficial party from it. And also at the same time, all these other companies also benefit from it if let's say they want to issue their own stablecoin for transaction. But there is a clause for that, there is a regulation for that. If let's say you want to issue a stablecoin, you need to back the stablecoin with United States dollar, the USD, or the US Treasury. And this also create demand for all this US Treasury by quite significant, because according to the projection, the act could grow 250 billion stablecoin market to 2 trillion in 3 years. All right, so currently the stablecoin market is around $250 billion. So this could grow until $2 trillion, and this could also increase the demand for the US Treasury, because when you want to launch a stablecoin or a stablecoin, you need to back it using US dollars, or you need to back it using the US Treasury. But of course, when we have all these new regulation come out, some of the traditional finance industry might be affected as well. For example, like Visa and also MasterCard, you can see from their stock price, due to this news, they have been facing some sell-off. And this is because all these stablecoin transaction may bypass all these Visa and MasterCard's network. All right, so you can see that with this act, certain stock in the financial industry or financial sector were very bullish, and some having some sell-off. So by understanding all these events happening in the stock market, we know that what happened in the stock market in June, then we can see that what happened to the stock chart as well. So the market broke its all-time high. SPY that represent the S&P 500 break all-time high last few days, and also the Nasdaq 100 that represent the top 100 tech stock also break the all-time high. So the market taken this very bullish because we have a peace talk in Middle East, we have the spending bill got approved Senate, and also we have this Genius Act also got approved. And while the US trade talk are pretty muted, so market are full with positive sentiment, and hence the market broke all-time high. But what investor and trader can do then? Because we know what happened, then what investor and trader can do? All right, so for investors, you could have missed some opportunity early on if let's say you doesn't prepare upfront, because during the April market update, we already mentioned about trend reversal. So if you our students or you already prepared homework upfront, you could have plenty of opportunity. But now it's time to be patient because now market at all-time high, things become expensive again. So you may need to wait patiently when for a pullback or a dip to the support level or the valuation you want to enter your investment or you plan for your investment. And for traders, actually for traders, there are still plenty of opportunities out there. You can patiently wait for a new horizontal support to form after it break all-time high, or you can do some short-term trading while the market is still stretched. For example, some swing trading or intraday trading. That will be perfect as well. So I would say markets still have plenty of opportunities. Right, so after we go through what happened in the stock market, let's compare the stock chart performance. So let's start with the usual, the 10-year chart, and why we choose the 10-year chart, because you always want to zoom out for the big picture as well. Because as an investor or traders, we want to choose the most high probability market. All right, so when we zoom out, so what you observe from the dip here and what happened now. All right, so you may type in the chat as well. So you can see that what happened in which market recovered the fastest, and also why. All right, so and also why it recovered faster. So I'm going to cover that as well. So first of all, let's take a look on the 10-year performance for the Nasdaq 100. So from the 10-year performance, we can see that over the 10 years, Nasdaq 100 has been go up by 437%. All right, so if you're just holding the Nasdaq 100 ETF that represent the top 100 US tech stock, like for example QQQ, if you hold for 10 years, you would have made around 400% and average per year around 43%. All right, and why US and also S&P 500 is around 200% over the 10 years and around 20% per year. So why US market go up to all-time high again despite all the uncertainties? All right, so because back in April, I think during that we see that trend reversal, and is this backed by some of the postponement in the reciprocal tariff, and also at the same time with Donald Trump finally I would say shrink down the tariff from taxing the whole world with very high tariff, become everyone 10% with some negotiation period ongoing, and he only aimed at I think focus on China and so on. This provided some stability, certainty to the market, and with a few of his action that always be very aggressive at first and then be more not so aggressive at the end. So overall, the market have this term called TACO, T-A-C-O, Trump always chicken out. And you can see that the market start to ignore all these Trump factors already, recently especially. So this is why market recovered. And also at the same time, during May, for my last market update, our tech earnings are quite strong. We have a strong tech earnings. For example, like Microsoft report very strong earnings. Amazon also report strong earnings and also strong data center demand. And also Meta also reported a lot of good news. For example, like strong demand, and also invest a lot in AI. And this caused a lot of rally for AI stocks. And also at the same time, we do see that in the Middle East, US managed to secure a deal as well. So Nvidia benefited from the Saudi and UAE AI deals, and also all the other AI companies. And this actually provided catalyst to the overall tech sector in the US. And as we can see, US stock market, the top 10 stocks most of them are tech stocks. So with all this tech rally, this caused the stock market come back to all-time high. So macro factors wise is because all these factors, like for example, the tariff delay and also the peace talk and also some of the monetary policies and also the fiscal policies, it caused some rally in terms of macro factors. And industry level wise, like for example, AI, computing and technology and semicon and so on, is because of some of these projects as well, major projects and also major mega trend as well. All right, we can see that AI also likely continue to grow. Hence, this provided the catalyst for the stock market to go back to all-time high. But if you miss all this earlier, reversal is okay, because if you miss it, opportunities always in the stock market as well. And if you do your homework upfront, you prepare yourself upfront next time, you will still have plenty opportunities to get. All right, so but now is the time to patient. It's not the time for us to chase the market. We may want to be patient and wait for a new support to form. And traders that know what is their main strategy, they can still trade the short-term setups while waiting for a major pullback for trend trading or mid-term trading. For investors, you need to have a clear criteria. Definitely not the time to for the all-time high market. Definitely not for investor for now, because things are expensive now. So investors need to work out their own criteria as well, very clear-cut criteria that what valuation you want to plan for your investment, and what are the great stocks or great fundamental companies you want to focus on, and what are the industries you are looking at. All right, I would say going forward, there are still plenty of opportunities in the market, but you may need to be patient to wait for the next dip. Who knows, coming few months may have another negative news from the US, from Trump, or from some Middle East tension again, or from some geopolitical tension again, and it could be a good opportunity for you to take a look again on all these mega trend related stock or strong fundamental stocks. All right, for now, market is at all-time high, so it's better to be patient and wait for other opportunity first. Wait for a negative news for an opportunity. All right, so next one will be China. So China, as we can see, the chart are still going sideways, even though we heard a lot of news about China stimulus by the government. So how many of you heard of a lot of stimulus by the Chinese government because of slowing down economy? You may type me in the chat as well if you heard of this before. And the next one will be, I would say, in the past, China has been in a property crisis, and also at the same time, their factories are having an overproduction issue. And this caused their inflation to be at a very low level. So their inflation now is at negative region, around negative 0.1, if I not remember wrongly. So what does it tell us? Well, what does negative inflation tell us about the consumer market? You may type in the chat as well. So what does this tell us? This data tell us with a negative inflation. So usually negative inflation means that the overall consumer spending are slow. Things are, the price of goods are coming down and people are not buying. Consumer are not buying, or weak consumer sentiment. And this causes economy to slow down. And the Chinese government have to stimulate the economy by cutting interest rate, by subsidizing some of the consumer purchases, and also provide a lot of subsidy to the factories and so on. All right, and this is a and also at the same time, political headwinds, like for example, the tech war with US, tariff war with US also caused some slowdown on the economy itself. All right, so for China, I would say things are still uncertain in terms of macro factors, but one good thing is the government are supporting the economy. But from the stock chart itself, from the stock reaction, we can see it's still overall sideways. And over the 10 years, it's around 5%, and over per year return average will be around 0.48%. All right, next one is Hang Seng. So Hang Seng market, as we know, Hong Kong used to be an Asian financial hub, but recent years, I would say Singapore are catching up, or Singapore already overtake them as a Asia financial hub. And from Hang Seng Index, we can see that the stock market are pretty muted as well. From 2015 until 2025, is going sideways, and is heavily influenced by the Chinese government nowadays. All right, even though we see a lot of IPO in China, but there's a lot of China companies there. All right, and with China slowing down, then this affected the stock market there as well. And also at the same time, all these geopolitical headwinds I mentioned earlier, like the US-China trade war, US-China tariff war, tariff war, and also the tension, like for example, the geopolitical tension at the region between China and Taiwan. This caused a lot of geopolitical uncertainty for the Hang Seng market as well. And we can see that even though early on we had the DeepSeek event back in January, and Hang Seng market rallied, especially the tech stock in the Hang Seng market, but the rally has been slowing down as well. And with the trade war truce between US and China, which if they have the framework agreement, we don't see very strong reaction as well. They still recover slower than the US market, but recently the chart are nearing the recent 2 years high, but I would say if you compare to the US market, their recovery are slower as well in terms of rate of change. All right, so these are Hang Seng market. And next one will be Malaysia market, FBM KLCI, recently rebounded as well, but it's weaker than other market. All right, so we may see this due to, maybe likely because of the trade war tension as well, the trade negotiation between Malaysia and US still ongoing, and also some of the foreign funds are not flowing into Malaysia. All right, so in this case, Malaysia still at Malaysia market are still on the weaker side. So overall 10 years around minus 11.5%, and average around 1.15 negative 1.15% per year. All right, so after we go through this 5 index, all right, this 5 index. So from overall comparison, which market provide the most consistent return over the 10 years? You may type in the chat as well. Which market provide the most consistent return over the past 10 years? Yeah, US. All right. So for investor or traders who are looking for high growth stock, so the US market, I would say, will still have the more growth company than other market, because if you compare all these high growth stocks like for now and in this AI mega trend or AI industry, you can see that mostly are from US. For example, Nvidia, for example, like all these Microsoft and also Google. So other than the few AI names I mentioned just now, what are the global brands you heard of from your daily usage of technology and also your daily life? What other global brands you heard that are listed in the US other than Nvidia and Google I mentioned earlier? What are the other global brands you heard of listed in the US? You may type in the chat as well. Yeah, Apple, like for example, Apple, your iPhone. Then after that, when we daily do our office work, all these Microsoft Office, Microsoft Excel, these are Microsoft are also US company. So we can see that companies in the US usually having a higher returns in terms of earnings and also in terms of growth. For example, let's say you take a look on Nvidia, trillions dollars company. They have very good profitability, and also at the same time they have very good growth as well. So in this case, all these high profitability and also high growth stock provided more predictable returns, all right, overall. All right, but of course, if you want to be successful in the investing market or trading market, you need to know how to select strong stocks and also fundamentally strong, fundamentally profitable and high growth stock as well. All right, so after we go through all the global indices, like major global indices, let's take a look on other factors as well. So first of all, will be money on the sidelines. So this is the money market funds chart we track on a big weekly basis among our analyst team in Beyond Insights. So there are a record of $7 trillion in cash on the sideline. So what does it mean? All right, so what is money market funds first before we answer what does it mean? All right, so what is money market funds? Money market funds works like our FD. Let's say as a retail or as a normal consumer or in an economy, we usually park our free cash in fixed deposit, all right, to earn interest rate. Same for the major funds. If let's say they are in cash position, they need to park the money somewhere. And usually they will park the money on the money market funds to earn all these returns like fixed deposit, earn the interest rate. All right, and one of the reasons why all these investors are stocking up on cash is to take advantage of the high risk-free rate now still in the US. All right, US interest rate is still around 4.5%. So you can see that 4.5% return, a risk-free return is quite attractive for now, and a lot of cash are still parked in the cash market in the US. All right, and these money market funds actually track US dollars. So you can see that a lot of funds, even early on during April, when there's some concern about the reciprocal tariff, you can see that there's some dip or move around of asset to other currency or other money market funds. But now it's come back to all-time high, $7 trillion in cash. All right, and despite some rotation earlier, more money continues to flow into the money market funds. And the money on the sideline can act as a fuel for risk asset. For example, like stock market. Stock market is one of the risk assets. So when the macro factors change or the monetary policies change, for example, we know that Fed may going to cut interest rate in September or December. So when all these major monetary policy change, all this money may rotate into some other asset to earn more returns because the risk-free rate could have dropped beyond certain level and they want to go into a more risky asset to earn more returns. So in this case, this could cause some catalyst for the upcoming bull market as well. All right. So this is one of the factors. And yeah, and in USD also one of the safe, I would say, reserve currency. So some of the conservative fund may want to park their money in US dollars as well. So all these factors cause the money market funds to be back to the all-time high again, around $7 trillion. Right, so this could feel as a next catalyst if let's say we have some asset rotation going on again, or all the money that earning the high risk-free return want to go back to the risk asset again. So you may see some rotation going forward if there is a major monetary policy change, or there's some major change in the macro factors. All right, so after we go through all the stock market, like for example, what happened, then what are the major indices responses, and the money market. So let's take a look on what to focus as an investor or traders. So usually we'll take a look on the risk first. So to handle it, because responsible investor or traders, I would say usually we manage our risk first. All right, so let's understand what happened in the macro side on the macro risk. So first of all, will be the inflation trend is still a key indicators, or I would say key economy results or data for us to monitor. For example, like the inflation trend in the US, whether it's trending down, going sideways, or still rebounding. And also Japan. So Japan is what happened is their inflation still at the high level and the higher side. So whether the Japanese central bank will increase interest rate or not. And this may cause some side effect to the US dollar as well. And of course, Europe and China as well, because they are one of the major economy powerhouse as well. All right, for China, we may want to monitor the recovery of inflation because it was in the negative region, and this show that consumer spending are slow. While at the Japan side, it's higher inflation, which means that the economy are on the expansion side. Consumers are spending and things are getting more expensive. All right, and tariffs are expected to raise inflation. Tariffs are inflationary, and recession for now is unlikely, but growth may slow down because of all these tariffs. All right, so we don't see that there's a recession in the US, unlikely it to happen, but growth may slow down because of the tariff. And next one will be geopolitical tension. So tariff cause some uncertainties in terms of supply chain. For example, during the trade negotiation, China tends to use the rare earth as a negotiation criteria, and this may disturb some of the supply chain because, as we know, rare earth is one of the important elements for all the technology nowadays, including our smartphone screen, laptop computers, tablet, and even military equipment. All right, and the Middle East tension may disrupt the energy sector, and also may cause commodity market to rally, and this may cause inflation as well. So the Middle East tension, even though we are now on the peace talk level, but things are still developing, so may need to be handled it with care as well. And lastly will be the US-China tech war. So as we know, US and China has been on a tech war for a while already in terms of semicon, aerospace, and all these different region and also sector and also industry. So China tech development is one of the key monitoring risks we need to do as well, because if let's say there's any new technology from Huawei or SMIC, then this may disturb the domination position or leading position of all these high-end AI companies like NVIDIA, all these chips from NVIDIA or even like AMD. So we may want to monitor the latest development from Huawei and also SMIC. All right, after going through the risks, let's take a look on the potential opportunities. So first of all, will be AI adoption continue to drive demand. So this year alone, we do see that a few good AI progress in terms of demand as well. So first of all, will be the Saudi and UAE deals. So Saudi and UAE AI deals actually is the second largest outside United States, or second largest in the world already. All right, so I would say US is the major market for the AI, and second market now, the biggest deal is Saudi and UAE AI deals. All right, they are talking about 1,000 megawatt, 5 gigawatt, I would say 1,000 megawatt at first for Saudi, and towards the end, they are aiming for 5 gigawatt AI campus in this region. All right, 5 gigawatt for Saudi, 5 gigawatt for UAE, and this actually triggers a lot of demand from all these for this high-end AI GPU and also all these data center parts, for example, like networking, server, and so on. All right, so these are big infrastructure projects for the data center for AI in Middle East. And of course, this is for training level only and also some inference level for data center infrastructure. And next one is the new trend about sovereign AI. So nowadays, other than the US, we can see that nations start to build their own AI data center as well. We can see the sign in Europe as well, then Saudi, UAE, and even China are building their own AI factory or AI data center. All right, so nowadays we have this new trend called sovereign AI, whereby government themselves also want AI. All right, so based on the spending bill just now also, United States government are going into AI as well. They have allocated some of the budget for AI infrastructure upgrade or apply AI in some of the government department as well. So we can see that the sovereign AI trend create demands as well as government are moving into AI space as well, other than the private sector. Of course, the military also moving towards AI. So from one of the study we have in the spending bill for the One Big Beautiful Bill is also to increase the defense budget to upgrade a lot of like technology or equipment to drones and all these automated vehicles. So these are the upcoming trend. And next one will be the inference demand. All right, so we do attend some of the AI conference in Singapore last month among our Beyond Insights analyst team. And we do understand from the experts or software engineers that inference demand actually requires, inference demand are high, especially for agentic AI. All right, agentic AI means the application part, like for example, the chatbot, the robots, the drones, all the application part. And you usually load a lot of models together. And this triggers a lot of like hardware resources. This demand a lot of hardware resources. For example, the demand for memories will be very high for inference part. And we can see that while the AI trend in the past was about training, about all the ChatGPT, now it's moving towards agentic AI, which means that robotics, drones, and even like the automated phone calls and also the chatbot and so on. So we have a variation of agentic AI coming out in the market, and all this agentic AI requires multiple models or multi-models. So this may even trigger more hardware requirement for all this memory, GPU, and also CPU, and also high-speed internet. All right, so these are the latest trend in AI. And next one is about the Genius Act, like I mentioned earlier, the stablecoin regulation, and also the One Big Beautiful Bill. And it's all about financial deregulation. So in the past, US are quite conservative about all these stablecoins, crypto, and also all these stringent or more restrictive regulation for the financial industry. So these two acts aim to deregulate some of it. And what sector or what industry likely benefit from these acts? You may type in the chat if let's say you are staying in the stock market or you're active in the stock market over the past few months. So with this Genius Act and also One Big Beautiful Bill Act, which industry likely benefited? All right. So to me or to us, it will be financial industry, especially those brokers firm and also some of those that are involved in the stablecoin or cryptocurrency. All right, and next one will be tax cut extension. As we know, 2017 is part one of Donald Trump 1.0. and now he extend his tax cut to 2035, if I not remember wrongly, for the income tax as well. And this will help the overall economy and also help the overall stock market. But of course, tariff may slow down the economy because tariff also indirectly another import duty that consumer need to pay, and this may cause inflation. But he do offset this by doing a tax cut extension so that the people no need to increase their income tax at the same time need to pay tariff as well. All right, but I would say this overall tax cut are beneficial for the overall stock market. And lastly, as an investor, I would say second half of this year, likely there could be still opportunity in industry that benefited from all these fiscal policy, like for example, the Genius Act, the One Big Beautiful Bill Act, and also do monitor for the upcoming FOMC for the monetary policies. And what industry likely may benefit from all this will be, first of all, will be the artificial intelligence, AI. Even though AI is quite like 2 years ago already, we have this AI started when ChatGPT launched, and all these infrastructure stocks, AI infrastructure stocks have been rallied a lot. All right, but with the new demand coming in from all these Saudi, and also UAE, and also other countries that are building their sovereign AI, this may improve some of the demand as well for all these semiconductors. And at the same time, like I mentioned earlier, the agentic AI part, the inference demand are coming in as well. Because as more and more industry move to AI, even government department move to AI, this may create more inference demand or reasoning demand. Inference means reasoning. You want to interact with the AI. And when we go towards like all these automated drones, automated cars, there will even involve more models between different models of AI, and this may create more demand for all this hardware. All right, so semiconductor potentially is one of the benefited industry from AI, and also all these infrastructure stock or software stock, for example, like all these Microsoft, Amazon, and so on. All right, and the next one will be defense. So defense also having some trend change. So if you study the latest US military budget, like for budget and also their projects, for example, like the Golden Dome, missile defense, and so on. So all these AI, high-end space equipment, high-end missiles, and also drones are the new trend. And this also involve AI and also involve automated drones and robotic stuff. All right, so all of these are in the future defense industry. So we may monitor that as well. And at the same time, US actually demand Europe to increase their GDP to 5%, defense budget to 5% of GDP. Same for Japan, Korea, and their Asia Pacific allies. So based on the news I saw, both of these are going to agree to increase their defense budget to 5% of GDP. And this increased demand for all these defense equipment as well. But of course, geopolitical tension-wise is not good because all of them are increasing defense budget, means tension are still on, tension are still high. All right, and next one will be financial industry. So financial sector, like for example, the industry in the financial industry, like brokers industry, like all these bank and also all these crypto-related brokers or stablecoin issuer may benefit from all this deregulation and also Genius Act. So you can monitor that as well. And lastly will be the industry or the industrial, sorry, typo here, industrial sector, because as we know during the defense budget, they also want to increase the shipbuilding capability in the US. So this may create better may benefit the industrial stock, and also at the same time, the budget do have some subsidy towards US manufacturer as well, and this also benefit the industrial stock. All right, so this one, I'm sorry for my typo, this is industrial stock. All right, so in this case, I would say these are the sectors that are having opportunities going forward. All right, since this is just a 30 minutes market update, I cannot update everything and also share with you all our other stuff. So we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and also safe way. All right, we have the most systematic course in the market. We have processed that for every single trading style. We have versatile strategies to handle all kinds of market conditions for short term like swing trading or for the long term like investing. And also we have a safe approach with proper risk management. All right, and now is the best time for you to learn a systematic way to trade or invest to capitalize on the upcoming opportunity. Like I shared earlier, the opportunities are there. But now market are at the all-time high, so definitely you still have time. You can wait. All right, wait for a pullback, wait for the opportunity. All right, and also you need to plan some time to practice and pick up the skill set while waiting for the opportunities. And also get yourself ready when opportunity come again, because under Donald Trump, he can say anything and suddenly crash the market again or cause a major pullback again, and that will be the potential opportunity there. Also, we have a hybrid class for the workshop. We have face-to-face and also online. So do join our 3-hour webinar to find out more. You can scan the QR code. Our next available webinar will be on Thursday, 3rd of July, 7:30 p.m. All right. And if you find this market update is beneficial to you, do recommend it to your friends So or you can ask them, you can share the YouTube links with them as well. If let's say you saw in our YouTube channel, or you can ask them to join this live session. All right, and now is there's time for there's end for my market update. I'll open the floor for Q&A. So any interesting question you want to ask me, you can type in the chat. Or moderator, if you saw any interesting question earlier on, you can type in the chat as well, so I can answer the question. All right, so let's take a look on the latest one by one of our participants here. So if budget for defense is increased, so defense budget increase, is it a good strategy to invest in defense stock or defense ETF, and what are the popular defense ETF? So I would say defense industry are having some major change as well. The traditional defense contractor are losing contracts to the new emerging companies or new emerging defense company, like for example like Palantir and also all these drone companies, smaller firms and emerging companies. So United States government used to deal with all these giant or mega cap or big cap of traditional defense contractor like all these Lockheed Martin, Raytheon. But nowadays they have some new trend. They shift to the smaller contractor that providing them more advanced technology like drones and also AI. So I would say to balance that, you can focus on defense ETF. And one of the defense ETF we are monitoring is SHLD. All right, I repeat again, SHLD. So you can take a look on the stock chart first before you plan anything on it. All right, so this is one of the defense ETF. It includes multiple defense stock, including the small one and also the big ones. All right, and second question, why US market keep trending up until historical high? How high is possibility of a pullback soon? All right, I would say I don't have a crystal ball to predict the future, but now market at the all-time high and valuation are quite high now again. All right, and usually when we are at all-time high market, it's easy to be affected. The market are easier to face a sell-off if let's say there are some negative news. And under Donald Trump, this guy can say anything anytime. All right, sometimes he may talk positive and cause the market to go up. Sometimes he may say something and cause the market to tank. All right, so in this case, I would say as an investor that well prepared, you can work out all the good stocks you plan to invest or all the strong fundamental stock first. And you may take the opportunity when he says something that crash the market to a strong support level. That will be the opportunity. But how high possibility? I would say anything can happen in the market. I would say next checkpoint we have will be the deadline for the trade tariff. All right, trade tariff. So he may say something to pressure his opponent, like for example, to pressure China, to pressure Europe, to pressure Southeast Asia. And this may cause volatility again in the market, and it may cause a pullback again. All right, so watch out for that date. And I would say don't totally too fearful of that, because we can see that in the past incident, after he caused a lot of uncertainty, things recovered because of some of the strong fundamental companies still have business go on as usual. For example, like the mega trend related stocks. So I would say this would be a potential opportunity if you see that Donald Trump start to pressure his trade partners again and cause market to be more volatile again and pull back to a strong support level again. All right, so anything can happen in the stock market. We just need to have a set of systematic way and also manage our risk properly. All right, and some of you mentioned about software companies, so Accenture and Sophie. So Accenture, I would say, is a solution provider. They are the consultant companies. Even though some of the government project, they will likely beneficial, but I would say based on the stock chart, they are not that good, and also their fundamental or their growth recently are not that great. All right, so I would say not really the hot stock to monitor. And Sophie is an emerging companies. I would say the profitability are still inconsistent. They are new companies in terms of fintech. So usually when we handle the emerging market, we handle it differently. It tends to be more volatile, and you cannot fully invest in all these emerging companies. All right, and how about tariff ends on 9 July? Should we exit? All right, I would say wait for the chart reaction first. So usually we can see a lot of noise in the market. All right, it's good that we know all the macro factors because it helps us to anticipate and plan earlier. But ultimate decision, we still want to see the stock chart reaction. All right, so I would say the 9th of July, it may cause some uncertainty, but for those that could have already holding a position, you could have already have a proper exit plan or a proper trading plan for you for exit criteria. All right, and what criteria you should exit your investment or your trading. All right, and what kind of level is an opportunity for you to re-enter after the volatility happen. So I would say, if let's say you are trading based on the stock charts, then you may want to see the stock chart reaction first. If you are trading the fundamental, then things may be quite delayed 1 quarter later on. All right, you need to have a proper exit plan on everything you do in the stock market. All right, a proper exit plan. Some may based on the stock valuation, some may based on the stock chart, some may based on the fundamentals. All right, I would say don't simply just because of you heard some news and just exit your position. I would say you may want to do some planning on what the condition you want to exit and take a look on the reaction of the stock market to the news first. All right, because Donald Trump may come out and just to pressure his trade talks or pressure his negotiation to go further, to pressure his opponent, then it may cause some volatility. All right. And also, yeah, some of you asked about any high risk of US debt and so on. I would say if the one big beautiful bill just passed and they increase the debt ceiling again, for now, I would say the coming half year, I would say should be no longer have much issue about the debt ceiling issue, because they already extend the debt ceiling, increase the debt ceiling by around $5 trillion. All right, and lastly will Coinbase affect Visa and Master? I would say Coinbase is the one that benefit from this Stablecoin Act from the Genius Act, and the one affected will be Visa and Master. But you may want to consider whether this may totally replace their market or not, or this would be a short-term news that could be a good opportunity for investor, because we do see that Visa, Master start to hold some, form some support at certain price level, and their valuation are still okay. All right, I would say it's not cheap, but it's still okay. So you may want to evaluate whether this temporary bad news will cause Visa, Master to be totally lost their market, or with their existing payment network, they are still a very profitable company. But this, of course, you may want to see the support, whether it's holding or not, and also the upcoming earnings, whether what the management talk about this stablecoin thing. Because as what I know, Visa, Master also involved in all this stablecoin stuff. All right, and let's take a look, shall we? Exit. So make sure you have stop loss. Make sure you follow the exit plan, carry through as well. Don't, because of like reluctant to cut loss or what, then you keep holding on to a losing stock and so on. So make sure you have a proper exit plan. All right, so what will be effect if the tariff suspension is not extended, or if extended? All right, so from this is what I know for now. Donald Trump did mention about, if let's say by due date, those that in progress of negotiation will get extension. All right, but I do believe that he may say something to pressure all these negotiations. So you may want to watch out for some volatility as we approaching the deadline. And for those that still not even talk to him, he will just give you a numbers. You need to accept it. All right, back to the reciprocal term or even a different numbers. All right, so for now, we know that US are talking with China, talking with India, talking with Japan, talking with a lot of countries, including like Malaysia. Also, I heard it's like talking, and also Europe also in ongoing. And Japan this morning, there's some pressure as well. He start to pressure, said, I will tariff you more if let's say you don't have progress in this negotiation, or you don't show certain commitment to certain terms. All right, so this may cause volatility ongoing during July. All right, but we do see that the market now all-time high. So any of these talk from Trump or to pressure the opponent or even increase more tariff may cause some pullback. So as an investor or traders, this is the time you need to be more patient, because the market is so stretched now and at the all-time high. So any bad news may cause some pullback. So don't chase the market now, I would say. But you also may want to prepare your homework upfront. What are the good candidates next for you to focus on, if, let's say for investor or for traders as well. All right. And lastly will be valuation. Yeah, China valuation is low. All right. So some of these stocks are very attractive. But you may want to understand also, sometimes the stock market could be cheap for a reason. All right, cheap for a reason. So it could be could be cheap because of some headwinds in geopolitical standpoint, and also it could be cheap because of some negative sentiment or short-term negative stuff, or even some mid-term negative factors. All right, I would say as an investor, you see that it's cheap, but you also need to be cautious. So if let's say usually in our strategy, we will monitor the trend of the chart as well, and also we want to see some of the factors as well. But it's okay if let's say you're a long-term investor and you also want to diversify into China stock, you may choose a few good ones with still a very high growth and also very good potential, like for example, in line with all these mega trend and so on. All right, so I would say valuation is good, but sometimes when you go into the stock that are having a very low valuation, you may entering in a downtrending stock and you may stuck there for a while. So you may want to monitor the stock chart and the momentum of the stock as well, and also understand what are the factors that causing this stock to be very cheap. All right, but I wouldn't say that you totally stay away from China. If let's say you see some good opportunities, you can, if let's say you have the knowledge on how to invest in China stock, you can still diversify some to China stock, because China still have some good stocks, just like because of the macro factors, the economic factors, and also the geopolitical standpoint, the momentum are slower. All right, so with that, I hope that I answered most of your questions. And also, yeah, I see some of you talking about Trump's credibility and integrity. Yeah, this is, I think I would say, this one based on your judgment, I would say we just trade according to what happened in the stock market and react accordingly, because what we can control is our buy and sell decision, and also our decision whether you want to invest or want to trade. All right, so whatever Trump said is out of our control, and we just need to react accordingly with a proper system and also a proper risk management. All right, and also a proper set of selection criteria to choose the right industry and also right stock, and also according to the macro factors to also plan our trading style and also investment style. So that's it. So we cannot control much of Trump action. This is subject to the future generation to judge or what. Maybe in future they find something about him or what. I don't know. But I would say as an investor or trader, we just react accordingly. All right, with that, I hope that I answered most of your question, and we already well exceeded the time. So that's coming towards the end of my market update. So see you guys next month, and hope you guys trade well and also prosper in the stock market.